welcome back to the RTM Nightline session. My name is Noor Ayuni and today I will be presenting with my partner Farah Natasha. The recent coverage by RTM highlights that low financial literacy remains a major challenge in Malaysia's investment ecosystem. According to the report, more than 70% of Malaysians still lack strong financial knowledge, especially in understanding investment risk, long-term planning, and proper financial management. The RTM article stresses that weak financial literacy often leads individuals into debt traps and poor investment decisions.
Many Malaysians still find it difficult to interpret basic financial concepts, which prevents them from making informed choices about savings, investment, and risk management. As a result, people are vulnerable to scams, easily influenced by unverified social media tips, and unable to plan effectively for their financial future. This issue sets the foundation for understanding how low financial literacy directly impacts investor behavior. Low financial literacy affects how Malaysians set their personal financial objectives. Many individuals struggle to plan for retirement, children's education, home ownership, and emergency savings because they lack awareness of suitable investment options. The difficulty in understanding concepts like compound interest, long-term investing, and diversifications leads many to rely only on basic savings products, which may not be enough to reach their goals. This situation is reflected in RTM's emphasis on how Malaysians face challenges in financial preparation, especially during unexpected situations. Without proper financial knowledge, people often misjudge the time and resources required to achieve their personal objectives, causing delays or financial strain later in life. This shows that personal goals can only be effectively achieved when individuals understand how to manage and grow their finances.
Next, about the financial objectives. The financial objectives are directly influenced by an individual's ability to understand and manage their money, but low financial literacy makes them difficult for many Malaysians. RTM report indicate that Malaysians often struggle with managing debts and planning for their future financial due to limited knowledge of financial instruments. This lack of understanding affects their ability to protect their principal, generate steady income, or invest for long-term wealth accumulation. Many people became cautious and avoid investment altogether, while others fall into risky schemes because they are unable to evaluate the reliability of an investment. Without strong financial literacy, individuals cannot properly plan for inflation, manage liquidity, or choose suitable investment products to meet their financial objectives. This creates a gap between what Malaysians want to achieve and what they can realistically accomplish with their current financial behavior.
Moving on to the risk-return trade-off. The risk-return trade-off is a key principle that many Malaysians misunderstand, largely due to low financial literacy. Although the concept explains that higher returns come with higher risk, RTM notes that many people misjudge risk level and make decisions that do not match their financial capacity. For example, some conservative individuals are easily convinced to join high-risk schemes that promise quick profits, while others avoid investing altogether because they believe all investments are dangerous. Social media also contributes to the problem by encouraging young Malaysians to follow trends without understanding the actual risk involved. Without proper knowledge of the risk-return trade-off, individuals cannot accurately evaluate their goals or risk tolerance. This misunderstanding leads to poor financial choices and exposes investors to unnecessary losses.
Now, I will explain about the investor profile and how far their risk tolerance is. Investor behavior in Malaysia is strongly influenced by financial literacy levels. Reports highlight how many Malaysians fall into debt traps due to poor financial understanding, and this is reflected in the different investor profiles. Malaysians are risk-averse, preferring low-risk products like fixed deposit or tabung haji because they feel safer with guaranteed returns. However, depending too much on low-risk investment may limit their long-term financial growth. Neutral investors often choose unit trusts or stable stocks, but limited financial knowledge means many rely heavily on agents rather than making independent decisions. On the other hand, risk-taking investors are often younger individuals that are increasingly drawn to cryptocurrency, forex, or speculative stocks. However, without proper financial literacy, they may underestimate the risks involved, leading to impulsive decisions. This behavior shows how financial knowledge shapes their risk tolerance and investment patterns.
Now, I would like to explain about the types of investment risk. Understanding investment risk is crucial, yet RKM reports demonstrate that many Malaysians still struggle with this concept. Systematic risks such as inflation, recession, or economic downturns affect the entire market, but many people do not fully understand how these factors influence their investment outcomes. As a result, they may rely on low-return savings methods that fail to protect them from rising cost of living.
However, for unsystematic risks, which are specific to individual companies or sectors, also pose challenges because investors with low financial literacy may choose shares without analyzing the company's performance, stability, or potential. This increases their vulnerability to losses that could have been avoided with better knowledge. Improving financial literacy is essential to help Malaysians manage both types of risk more effectively and make wiser investment decisions.
Hello everyone, my name is Rosmin Shazudin binti Muhammad Salmi and my matrix number is 2023463368. Today, I will be presenting Chapter 2, The Instrument, which focuses on how Malaysians are using or not using the financial instruments available in the capital market. Let me start with the main issue. According to the Securities Commission Malaysia, SC, the growth of bank deposits is rising much faster than investment growth. This means that many Malaysians prefer to keep their money in savings and fixed deposits instead of investing in capital market instruments. In simple words, their money is not working for them. Firstly, the financial assets. Malaysia actually offers a wide range of financial assets such as equities, bonds, unit trusts, and derivatives. However, retail participation is still low. The SC highlights that money is flowing into unit trusts too slow, while deposits are increasing at a much faster rate. This situation has two major effects. First, it limits long-term wealth growth. Second, it reduces portfolio diversification. So, even though the opportunities exist, Malaysians are still not fully utilizing these financial assets. Next, we look at equity and debt instruments. Stocks and bonds generally offer higher long-term returns, but many Malaysians avoid them due to risk aversion and limited financial knowledge. The SC also notes that Malaysians have a low understanding of the time value of money and the importance of diversification. Because of this, many people still prefer holding cash instead of investing. Malaysia provides many useful financial instruments, but they remain underutilized because people feel safer saving rather than investing. With better financial education and awareness, Malaysians could improve their long-term wealth and take better advantage of the capital market.
Thank you for that overview. I am Rasna Ayuni binti Zaman Hui and I will be continuing with pool investment, real asset, savings and deposit. And finally, a full summary of all key components in this infographic. Next, we look at pool investment, which include unit trust, mutual fund, and ETF. According to the Securities Commission Malaysia (SC), growth in unit trust is slowing, and this shows that Malaysians are still holding too much cash in the bank instead of participating in managed funds. This trend reduces the overall effectiveness of our capital market because money is not flowing into diversified investment. Pool investment actually offers two major benefits: diversification and professional management. By pooling funds, for many investors, the risk is split across different assets, and fund managers handle the research and decision making. But because Malaysians prefer to stay in savings and fixed deposit, pool investment are not being fully utilized, limiting long-term wealth growth, and this is one of the key issues highlighted by the SC. Next, moving to real asset, which refer to physical tangible assets such as real estate, land, and gold. The data shows that Malaysia still have a strong preference for real asset over financial asset. While real assets are generally more stable and seen as safer, they also require higher capital and may not provide the diversification that financial assets offer. This heavy focus on tangible assets contributes to an unbalanced investment ecosystem, where too much money is tied up in property and gold instead of being spread across productive financial instruments. So, even though real assets are valuable, relying on them alone limits portfolio growth potential. Finally, savings and deposit remain the dominant component of household wealth in Malaysia. Malaysia holds 8,086 billion in bank deposit excluding EPF, which is extremely high. These heavy concentrations in low return instruments affect long-term wealth building because savings and fixed deposits offer stability but very limited return. The SC has repeatedly encouraged Malaysians to shift at least some of their cash into more productive investment like unit trusts, equities, or bonds. So, while savings and deposits are important for security and liquidity, relying on them too much slow down overall financial growth and leave investors exposed to inflation. Before we end today's segment, here's a quick recap. We look at real assets, which are physical investment like property and commodities. We also explore pool investment, where investors combine funds for diversification, and saving and deposit, the safest option for steady, protected returns. Together, these three form the core of the financial system is suited to different goal and risk level. I am Rasna Ayuni, and that's all from us today. Thank you for watching.
Good morning. Today, I am Sabrina reporting live with today's top story, the investment ecosystem in Malaysia. Let's dive into the latest trends shaping our financial markets. First up, the secondary market is witnessing major changes. Gen Z and millennials are now actively trading using digital platforms such as Rakuten and MIDF Invest. Real-time systems like Wimscore have taken over manual trading methods. Retail investors increasingly influencing price movement and social media is playing a major role. Panic buying and selling caused by viral content contributes to high volatility. Experts highlight that financial literacy is crucial to avoid impulsive trades. Moving on to the primary market. IPO activities are declining due to unstable market conditions. Instead, companies are shifting to private placement, which are faster and more cost-effective. There is also a growing use of employee stock ownership schemes, especially in technology startups. However, IPO participation remains low as investors prefer safer, short-term investment. Analysts suggest that Malaysia must attract more innovative and technology-based businesses to revive IPO interest. In market modernization, Bursa Malaysia is introducing ESG indices, carbon trading, and Sharia compliant counters. The exchange is also improving data transparency through digital reporting. Unfortunately, liquidity levels are still lower than neighborhood markets like Singapore and Hong Kong. To boost activity, there is a strong need for more foreign investor participation. Next, we look at the Securities Commission. In response to digital innovation, the Security Commission now regulates cryptocurrency, digital assets, and peer-to-peer financing. New guidelines have been introduced to address online scam and misleading influencer promotion. Despite continuous TikTok and Telegram warnings, scam cases continue to rise. Authority emphasized the importance of stricter monitoring of investment influencer or guru pelaburan to protect newcomers. Stockbroking companies are embracing changes by shifting towards low-cost online brokers. This platform reduce fees and provide features such as research reports and AI-based trade recommendation. This will attract more young investors. However, there is a concern. Too many new traders begins without fully understanding the risks involved. Experts recommend that broker implements mandatory beginners tutorials before trading. Today, opening a CDS account is simpler than ever. It is fully digital through the Bursa Anywhere app requiring no physical forms. This convenience encourages more early-age investors to join the market. But with simplicity comes risk. Young traders may act emotionally without proper investment planning. To counter this, it is suggested that a risk profile check be completed before activating a CDS account. Before we end today's bulletin, let's recap the key highlights. Malaysia's investment ecosystem is evolving rapidly with young investors and digital platforms leading the change. However, this growth comes with challenges such as high market volatility, declining IPO interest, and increasing digital scams. To keep the market strong and competitive, we must enhance financial literacy among new investors, encourage innovation and technology-based business growth. And other than that, we must strengthen regulatory oversight and promote responsibility trading behavior, especially with the ease of digital access. While accessibility to investing is improving, education remains the real investment that delivers the best returns. That's all for today's edition of Finance Today. Stay smart, invest wisely, and we will see you in the next report.